Inflation in August 2021 increased by 5.3% on a year-on-year basis. You can see here it was pretty steady during the year, and then all of a sudden, early in this year, it went up to 2.6% in March, 4.2% in April, and it's been at 5% roughly every month since then. The major culprit here is import prices due to supply chain disruptions, shortages because of transportation problems, shortages of staff, etc. So import prices are one of the major culprits here, as well as other things, hourly earnings, shortages of food because of droughts, etc. Food prices are up, cost of living is up, inflation is up, house prices are up, rents are up. I'm not telling you anything you don't know. Cash interest rates are very low, and there's not much choice out there. So what do? Interest rates are pitiful. The markets are up. Here are your choices for your best savings accounts rates. These are money market rates. 0.7 per year, 0.6, 0.5. What are you going to do with these pitiful rates? They're less than the inflation rate, and even if inflation went back to 1%, they're still lower than the inflation rate. So you're losing by leaving your money in money market. The question is how to fund your retirement, your daily living expenses. How do pensions invest so that they have money to pay out to their beneficiaries? How do we survive in this kind of market? And the choices there are to how to survive in today's economy. What's out there now? What are the realities today? Not what we wish was there or what was there a year ago. What's there today, and how do we survive in today's economy with these very low rates? Here's a table on U.S. Treasuries in terms of 10-year bonds. You have Europe, etc., Japan, Australia. These are your 10-year government bond yields. So in the U.S., if you buy a 10-year bond, it's going to pay you roughly about 1.34%. This will change on a daily basis. It'll go up or down slightly. But the point is even a 2-year bond is paying 0.226, which is basically nothing. And 10 years, well, a lot can happen in 10 years. You're going to get 1.34%. So you say, well, the rates are lousy in the U.S., so I'm going to go somewhere else. Well, in the Eurozone, it's no better. They're less than 1% across the board. And in Japan, it's 0.04. So when you hear people saying, oh, well, the U.S. dollar is going to fall, my point is, okay, so where are you going to go? Why is it going to fall? It's no better overseas, and Europe is certainly no haven for higher interest rates. Here are some alternatives. These are various funds that are trading on the stock exchanges in the U.S. Here are their symbols. These are all portfolios. So here are their last prices, volumes, the 52-week highs and lows. Here's their dividend yield on the right side. You can get 14%, 10%, 9%, 8%, 7%, 6%, 5%, 4%, etc. The point here is not to start saying, well, this one's better than that one because it pays more. No. The idea is to show you that there are alternatives out there on what to do with your money. These are portfolios. They're all different. They have different strategies. Some invest in bonds, some in stocks, some combinations of both. They have different risk profiles, and there's different risk levels in each one. But there are choices out there, and that is the point of this. The market is forward-looking, so it's looking at where are we going to be in, 6 months or so. In the spring of next year, that's where the markets are looking at. So that's what you want to be investing for and looking forward to the future. Interest rates are at their lowest level in 40 years. That's a fact. Trillions in stimulus and cash available, possibly more stimulus coming down the road. We have an improving economy going forward and increasing profits. So these are the backdrops of a good economy and a good stock market. The economy is improving slowly, so there's really not much other choice. We've talked about the record high U.S. profits in the second quarter of 2.4 trillion and GDP growth of 6.6% in the second quarter. So this is why the markets are at all-time highs and going up, 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 up. And there's 10 million jobs openings in the U.S. for those who want the jobs. So what do we do? What do we do? There's problems, there's solutions. We're worried. The markets are all-time highs. What do you do? Well, it's conflicting information. All sorts of people are talking about crashes. Oh, crashes, crashes. But the real thing is the market on the 20th of September went down to 33,970. This was a 614-point drop from the all-time high of 35,631. This is probably a buying opportunity. Yeah, you've had maybe a 2% or a 2 to 4% correction in the last little while, but it's not really a correction. It's just a pullback. So this could be a buying opportunity for the longer term. But what do you do? Well, we don't know. It's no, yes, should we invest? It's too expensive, all-time highs. What do you do? Well, you've got to start looking at those areas that are doing well, those that are profitable, the quality stocks. They are out there. There's a lot of them that are paying well and they're doing very well. Thank you very much. And that's what you got to look for. The quality. You got to find the winners. The best deals. They're out there. Those that are profitable. They are there. And you want to put and place your bets on the winners. And there's some very good stocks out there. So those are the ones that you want to find. But if you can't find them because you don't have the time or you don't spend too much time doing all this analysis work, well, then you go through ETFs, which are exchange-traded funds. You let them do the work. They have professional managers in many cases, and they have global expertise. So that's one way of participating in these markets. Or you just say, hey, I'm going to buy index funds from my bank, which are in the Dow, the S&P 500, the NASDAQ, the Russell, etc. So these are index funds, and this is one way to participate in the markets. It's a question of just doing something, investing slowly but surely. There's different opportunities out there, so the question is just start. Start doing it now. Stop listening to all the doom and gloom guys because you're in there for the longer term. And hopefully you found this video helpful. Thank you very much for watching, and I'll see you next time.